Hi, this is Zach Meir from Zach's Traders Cafe with a look at some bulletin board hero stocks for Wednesday the 29th of June. Starting off with the coal of Africa, where we can see the shares are still trying to consolidate the big move, the May spike, initial May spike there through the 200-day moving average at 2.82 pence. We had a golden cross for June between the 50-day and 200-day moving averages, and then a rebound off the floor of this rising trend channel from December around the 3.8 pence level. While we're above that, looking for a best case scenario target over the next 4 to 6 weeks as high as 6.5 pence, which is the December resistance line projection. If you're cautious on the shares, maybe wait for an end of day close back above the 20-day moving average at 4.28 pence. Stop loss back below 3.8 pence. As far as the next stock is concerned, things are looking pretty strong indeed as far as the latest rebound is concerned. Egdon Resources here with a rebound off the 50-day moving average at 9.3 pence, and also the floor of this rising February price channel. The move higher backed by a triple rebound off RSI 50 over the last couple of weeks. And the view at the moment is that while we're above the 50-day line, we could head as high as 14 pence, which is the top of the February price channel. Time frame on that move as soon as at the end of next month. Another strong performer of late is Mariana Resources, and here you can see a really sharp breakthrough former resistance from May, 4.1 pence, and really well above that we're looking for a big target here as high as 7 pence, which is the top of this rising February trend channel. The good news here is the way that we've seen new support come in well above old resistance ever since the break to the upside at the end of April, when we had that golden cross between the 50-day and 200-day moving averages. At this stage only back below 3.8 pence and below the 20-day moving average at 3.83 pence would really even begin to delay the upside scenario. Any dips towards 4.1 pence currently regarded as a buying opportunity to cool off the overbought RSI indicator. Encondezi Energy is next, and here we see how it's been consolidating around the 200-day moving average at 3.49 pence. Gap fill reversal here with a gap to the downside last week, and then filling it on a closing basis for this week. Ideally, we see a quick break back above the 4 pence level, or even the 50-day moving average level if you're cautious at 4.46 pence, before we hit the top of a rising December price channel at 7 pence over the next month or so. Next up, a stock which haven't covered too much of late, but Paragon Entertainment. It's in a broadening triangle formation, just approaching the 200-day moving average at 1.73 pence. An end of day close above that should then open up the next target, which is the top of the broadening triangle at 3 pence plus. The triangle in place since the end of October, and the upside argument valid, especially while there's no break back below the 50-day moving average at 1.5 pence. An old favourite next in the form of Rockhopper Exploration. Here we've got triple bear trap reversal from below the 200-day moving average at 33.29 pence. That's the black line there. Uptrend line from February running through at 31 pence. So while we're above that line, we're looking for a decent move towards the top of this broadening triangle formation, heading for 47 pence. That's the December resistance line projection, and the time frame on that the next 1 to 2 months, especially if we can get a quick clearance of the 20-day moving average at 36.81 pence. Finishing off with a request from a Twitter follower, comes in the form of Sylvania Platinum. Here we've got decent end of day close above the 50-day moving average at 6.58 pence after the recent bear trap rebound towards the 6 pence level. Bullish divergence with that lower June floor versus May, and that should set us up for at least initial target at 7.65 pence at the 200-day moving average, and then a journey towards the top of this broadening December triangle at 9.5 pence over the next month. Only cautious traders really waiting on a break of the 200-day moving average before going long, but we've got this bullish divergence line here in the RSI window, which should drag the shares higher. That's it from me. More updates at the same time tomorrow.